My name is Paul Chawrun. I'm the Chief Operating Officer for i-80 Gold, and I'm very pleased to be providing you with our story, which we feel is very exciting and is industry leading. So before I begin, I'd like to go through, just provide you with the option to go through some forward-looking statements that I will be going through, so there is some cautionary language. I think the best thing for me to do to start is I started in May, and I don't believe in my entire career for 30 years I've been able to be working with such a great set of assets, a great team in a great jurisdiction, and being able to move this forward with very little technical risk, putting this together. I've personally been involved with a number of success stories. So we have an industry-leading pipeline of Nevada-based gold projects. We're the fourth largest mineral resource holder in Nevada, with all of these deposits that are open for expansion. This is well understood geology and metallurgy. We have a very clear and defined pathway, which I'll get into, for an annual production of approximately 600,000 ounces of gold per year. And then how this is going to happen is we have 4 brownfield assets with significant infrastructure. All of these are previously operating mines with very known geology and technical work. And we're going to be feeding a hub and spoke model to the Lone Tree autoclave that you see there. We have an experienced management team, all of which, it's based in Reno, all of which is very strong experience working for the majors with Kinross, with some of the other companies in the area. And then just in general, we have 3 underground mines that are going to feed the Lone Tree autoclave, and we have 2 open pit mines that we're going to be developing. So we have over 1 million ounces of measured and indicated at 8.4 grams a ton. That's very good grade. And we're in the process of converting the inferred. We already have some drilling campaigns completed of approximately 2.5 million ounces of 8.5 grams inferred. And these would be economic at even slightly over $1,000 per ounce. And then with the price of gold today, they're extremely economic. And then on the open pit resource base, we have 5.5 million ounces of measured and indicated, with another 5 million ounces of inferred. And in addition, we have significant silver resources. We have approximately 100 million ounces of measured and approximately another 193.4 million ounces of inferred. So the strategy is to feed these 3 underground mines to the Lone Tree autoclave that you see in the middle of the picture there. And then in that timeline, we'll be developing the open pit mines. So as I mentioned before, we have a strong resource base, and all these deposits are open for expansion. We have put together some preliminary economic analyses, some PEAs that we have put onto the public domain, and that's just an indication with the current resources as they were about a year ago to be able to outline roughly what the economics are. So the underground resource base, as I mentioned before, is very good grade, and you can see where that is coming from the Granite Creek, the Archimedes, and the Cove underground. And then the open pit resource base, as I mentioned before, so that's 5 million ounces of M&I and another 5 million ounces of inferred. You can see the Granite Creek open pit, which is over 1 million. The Mineral Point is 3 million. And then we have the Lone Tree, which is far future, which is about a little over several 100,000 ounces. That's on the indicated, or the measured and indicated. And then for the inferred, which we're in the process of converting, we have another 5 million. The key point here as well is the Granite Creek open pit is already drilled off to measured and indicated, so it's a much better continuity. And we understand that well enough, and then we can move that project forward without having to do any further drilling. We will do some drilling, but we are able to move that forward. And when it's indicated, it means when you do the technical work, you can convert those into reserves. So we've broken all of these projects down into priorities, which we've called Phase 1, Phase 2, and Phase 3. In terms of annual production, we will achieve approximately 150 to 200,000 ounces by 2028 from 2 of the open pits. So that's the Granite Creek and the Archimedes underground. We're in the process of refurbishing the Lone Tree autoclave. And then in that time frame, several years later, we expect to be able to produce in the range of 300,000 to 400,000 ounces by 2030, 2031. So that's in approximately 5 years. That will consist of the underground from Cove and the Granite Creek open pit. And lastly, the largest, our flagship, is into the 600,000 ounce per year range in approximately 6 or 7 years, 2032. Now, I also want to emphasize that the technical work is more advanced on Mineral Point, and we are looking at accelerating that and prioritizing that ahead of the Granite Creek. And it's possible, as we continue to do the work over the next 6 to 12 months, we may, in fact, prioritize Mineral Point ahead of Granite Creek. So the preliminary economic analyses, the PEAs, were put together just to get an idea on what we have in terms of economic potential. So I feel we have a tiger by the tail here. So the Granite Creek underground, and this is, which at the time looked like a fairly conservative estimate. Now it's ultra conservative at $21.75 per ounce. When you take a look at the net present value and approximately 5% discount, you're looking at in the range of $550 million, or 1.5 at $2,900, and of course it significantly exceeds that at current spot prices, which is over $4,000 today here in October of 2025. And secondly, the two open pits provide a value of over $1 billion at $21.75, of over $3 billion at $2,900, and if you add all that up, it's $1.6 billion to 4.5 and then beyond. So significant value for us as we develop these assets. So it's really all about executing on all the technical work that needs to happen to move these forward. And I'll explain those in detail, but the technical work, in my view, is quite straightforward. I've been in the mining industry for over 35 years. I'm a geologist, I'm a mining engineer, and I've been working on a number of other projects. This team, I'll get into that a little bit later, but this team has put together mid-tier mining companies in the past, and this is an excellent example of how we're going to put this together to be another mid-tier producer. So all of this puts an annual production from the underground mines of approximately 150 to 250,000 ounces per year, very high grade. And then the two open pits for Nevada, very good leach kinetics in the range of about 400,000 ounces per year in that time frame. So this is an industry-leading pipeline, and the only question is really how are we going to be able to put this together, which I'm going to go through. Just to put this into an annual production and where is it going to come from, you can see that through to 2034, we have continually ramping up production up to roughly 800,000 ounces per year. I mean, this will be optimized going forward and potentially smooth, but you can see that the gold bars move to 600,000 ounces per year and then decline. But the reason why they decline is because we haven't drilled. We will be continuing to drill and expecting to fill in that gap in the range of 500,000 to 600,000 for many, many years to come. The Mineral Point, as you can see, has a 17-year mine life. And just some of the specifics on this. So right now, in 2025, we're in the development phase. For 2026 and 2027, we have a third-party toll milling agreement for the ore coming out of the Granite Creek. We're developing the Archimedes, and we're going to be refurbishing the Lone Tree facility. Once 2028 comes in, we have extremely good margins from both Archimedes and the Granite Creek underground, and then we'll be in development on some of the other open pit deposits, and you can see how that annual production continues, and we're going to be in the range of $1,400 to $1,500 per ounce as we put this all together. We have active infill drill programs currently going on right now at Granite Creek. We've completed Cove, and we will be initiating Archimedes, and we fully expect those programs to improve the overall economics of these deposits as we move this technical advancement forward. Okay, so this slide shows an overview in detail on the level of technical advancement on each of these projects, the work that we're going to be doing to get to feasibility stage in most of these, and secondly, the work that we need to do to get to the permitting and the timeline in each of the three phases that I mentioned before. So the Granite Creek Underground, the Archimedes Underground, and the Lone Tree Autoclave, phase one, is virtually all permitted. I say virtually because you always have standard operating permits as you go. So with the main permit, the state and the national permits have been achieved. And then for the components of the Granite Creek, we have the water that's going to be adjusted. So we need to have an engineering design change for that. For the Archimedes Underground, we have permits down to the 5100 level, which is approximately 2 years worth of mining, and we're working on the permitting to get that below. And then for the Lone Tree Autoclave, this facility operated in 2000 and up to 2006, and there's been some adjustments into the environmental standards that we need to include. And secondly, we're having stacked tailings instead of conventional tailings. So there's been some adjustments to the operating processes. So you need updated permits. So phase one is permitted. Phase two, the Cove Underground, is in progress for a feasibility study that we expect to issue in Q1 of 2026. The permitting is ongoing, and primarily that's a dewatering exercise. The ore body has been drilled off. We have the model now. I'll get into the details a little bit later. And we're working on some of the details of the feasibility. And the Granite Creek open pit, the permitting is just about to be initiated. We've just started it this quarter, and we're going to be working on the technical work. So those two there are primarily technical work and permitting. And lastly, the Mineral Point open pit, we're working on initiating a pre-feasibility study. Additional drilling is potential for 2026. And lastly, the permitting for the Mineral Point is subsequent on the Archimedes Underground below 5100. So we expect to be able to start permitting Mineral Point open pit sometime in 2026 or possibly in 2027 as we work on the technical work. But this is the outline that we have, and then all the while that we're working with Granite Creek with the toll milling, there's a small amount of toll milling from Archimedes. We'll be completing the refurbishment of the Lone Tree Autoclave processing facility. So i-80 has been very busy in the last year. We've worked on a lot of the strategy. There's been a significant amount of technical work, and just some of the achievements that have been completed to date. And there's a lot of catalysts going forward as well. But there's a new development plan on how we're going to reach 600,000 ounces. There's been 5 PEAs completed and issued onto public domain. And the reason for that is so that if anybody wants to, they can go into detail and take a look at what the economics of these projects are and try to understand how this is going to work. We've stabilized the Granite Creek Underground development. We're working on drilling off the SPZ zone, which is at depth and should be able to provide more lateral extent. There has been some operating issues in the past that we're working to complete. There's been a lot of water ingress that wasn't expected. However, that has been stabilized. We've added management depth across a lot of roles, including myself. We have a very strong operating team in Reno, and as well, the next level down is one of the most difficult areas to be able to hire in the mining business today. The very senior is a challenge, but the second level down where the people actually cranking out the work and the level of expertise, so that's the geologists, the metallurgists, the mining engineers, the people putting together the environmental engineers for the permitting. We have that depth in Nevada with people in experience in the area. So that's been a significant gain. And in fact, we don't find a real challenge for us to find good, talented people in Nevada. i-80 has a very strong name, and for every position that we issue, we have multiple strong candidates, and there is a competitive process for us to hire some of these positions. We've advanced a recapitalization plan to support our development. Our balance sheet was challenged until we were able to raise back in May approximately $300 million that's including some future warrants. So there's some expectations as to having a higher stock price, which in fact from issue has significantly increased since May. And we are working on future financing to be able to put this together to be able to be operating by 2028. And we've also commenced construction of the Archimedes underground at the very end of Q3 and into Q4. We're having significant progress of our second mine over at the Ruby Hill property, which is the underground component is called Archimedes. So the first step on our recapitalization plan has been achieved, as I mentioned. So approximately $200 million was raised through a bought deal and private placements in 2025. We settled some gold and silver prepayments totaling $42 million, and we expect to allocate approximately $92 million of this to fund the construction activities. What the key focus now is for us to execute on the next step for the Phase 1 execution plan is to address the long-term growth. So we're targeting $350 to $400 million in debt financing. We don't plan to be issuing equity for this. We want to eliminate the gold and silver prepayment obligations, and we are looking at divesting some of our non-core assets, and that includes the FAD or the FAD project. We are also evaluating, if it works, potential royalty sale on some of our production going forward as ways to be able to finance the development plan. In terms of catalysts going forward, so we've already commenced development at Archimedes, and we expect to be able to start drilling in several weeks' time for defining that ore body better. There was quite a lot of inferred ore at depth, so we'll be initiating the drilling campaign for that in several weeks' time, sometime this quarter. The second thing is we are drilling over at Granite Creek. We expect to be able to issue a new resource. We expect to be able to issue reserves with a feasibility study by the end of Q1 in 2026. So that's the feasibility for the Granite Creek underground. For the Cove underground, we've completed all the drilling. We have the resource model, and we expect to be issuing reserves with a feasibility study by Q1 of 2026. We are nearly complete a Class 3 engineering feasibility level study with the Lone Tree autoclave refurbishment. And in fact, we've started the initial early works, and we expect to be issuing the feasibility results for that this quarter in Q4 of 2025. And then the two open pits, the Granite Creek open pit is possibly mid-2026, but we're working on a number of areas of technical optimization. And lastly, the Archimedes underground feasibility, once the upcoming drilling campaign is complete, we'll put together an updated resource and a feasibility study around that, possibly by the end of 2026, but more likely in Q1 of 2027. And as I mentioned before, all the while an ongoing recapitalization plan to execute on this. So a technical overview of these properties. So we have the Granite Creek property, and as you can see, it's in a gold camp that has operating mines with Turquoise Ridge from NGM. We have the underground mine, which is in operation at the Granite Creek property, and we also have on the same property the two open pits. This is approximately 10 kilometers along on the same trend of gold, and this region has produced over 20 million ounces of gold and is expected to continue to operate at a very high rate from these operations. So just a summary of the PEA, the one thing I'd like to emphasize on these numbers, and I'll run through the details, is this is based on what the inferred, measured, and indicated resources were as of approximately 2 years ago. There's been 2 years of drilling, and we're in the process of drilling again, and we will be updating on a feasibility study towards the end of Q1 of 2026. But just with the resources and just having a general idea, we're in approximately all-in sustaining costs of $1,600 per ounce with an annual production of around 60,000 ounces per year, and that provides an after-tax cash flow of $420 million. You can see also the grades for the M&I is 10.5 grams per ton, and the inferred resource is approximately 13 grams per ton. I'll outline where those are in the ore body itself. This ore body is very well understood types of geology. So it's a Carlin trend mineralization that follows along the structural faults from an epithermal type deposit. So the ground conditions are a challenge and the water is a challenge, but we have continually improved working on that. And most importantly, we have been getting excellent resource reconciliation with the grades and the tons per level. But when you take a look at what we've been mining, you can see that the OG zone, which is on the left, upper left, it's narrow and steeply dipping. And so it's an ongoing challenge to continue to keep up with the development as you mine a fairly narrow zone. However, the South Pacific zone, which is the lighter red zone there, has shown very good grades. It's inferred resources today, but this is where we're drilling now, and we're going to be converting, we expect to be converting that into indicated with approximately 40 holes, 14,000 meters, and we did issue some results about a month ago, and we're going to continuing to issue we expect to continue to issue the results and then have this put together in a feasibility. There is potential for expansion in this area. So if you take a look at the bottom left there, you can see the green and the yellow. We have been able to get intercepts well outside of the known zone. And what we're doing right now today is we're infilling those zones. Once that's complete, we hope to be able to get an ore body defined so that we can have better lateral extent. And if you recall from the previous slide, I mentioned how it's narrow and steeply dipping, but we actually should have better lateral extent, which provides us with less development per meter at depth, and as well gives us an opportunity to be mining at higher rates to be able to feed in due course. So we have high-grade mineralization. It's consistent. There is potential for continued expansion to the north and at depth. And the most northernly and deepest hole had excellent results. You can see 33 grams per ton, 30 grams per ton, and we are in the process of infilling in between those. So the open pit at Granite Creek is not part of phase one. As I mentioned earlier, it's later years, phase two. But what's unique about this deposit, or this part of the deposit, is it's approximately 1.2 grams per ton. It's 1.4 million ounces, and it's all been drilled. The PEA outlined approximately 10-year mine life with a production of around 130,000 ounces a year and an all-in sustaining cost of approximately $1,225 per ounce. When you use $2,900 spot gold price, that is an after-tax cash flow of almost $1.3 billion. And if, depending on what spot price you use, it has excellent potential going forward. So when you look at this in detail, what's happening today is we're working on the technical optimization of the Granite Creek. So we have the mag pit, which is trending approximately north-south, and we have the CX pit, which is approximately east-west. They're on different structures of mineralization, and the mag pit has a fair bit of shale and carbon, and what that means is it will need to be processed through a CIL process. You won't be able to heap leach it, whereas the CX pit has a much lower amount of organics, and that can be produced through a heap leach process. So the current work that's ongoing on the technical side is to be able to drill these out for the technical work, understand the pit wall angles, work on what the leach kinetics are optimally, and then see where it makes most sense to be able to heap leach from the CX, produce from the mag pit, what's the overall size of the plant, and work through an optimized mine plan. We've just now initiated the federal permitting, which is a full EIS, which is approximately a 3-year process. And we have a pretty good understanding of the transition zone because these operated in the past. These mines operated in the past, so it's a well-known ore body. So the 2025 focus is early stage permitting, trade-off analyses to optimize project economics, And for 2026, it's pre-feasibility or feasibility study and seeing how that fits as we continue to work through the technical optimization. Over to the Ruby Hill property, and this is the property that is approximately 250 kilometers from the Lone Tree. So this consists of Archimedes underground and Mineral Point open pit. As I mentioned before, Archimedes has just been initiated. We're just now doing the development at its and the main decline so that we can initiate drilling. And the Mineral Point technical work is well advanced. In fact, it's further advanced than Granite Creek technical work, and putting together the optimization for Mineral Point. So for the underground, when the PEA was put together last year, well, the results were issued this year, but the work was done last year. The indicated resources is approximately 400,000 ounces. The inferred is almost just under 1 million. 7.6 grams per ton, which again is excellent. It showed a mine life of 10 years and approximately 100,000 ounces a year at an all-in sustaining cost of approximately $1,900. The main reason why the cost is higher here is because the distance to be hauling this to the Lone Tree autoclave is further. And other than that, the mining costs are expected to be roughly about the same as some of the other deposits. And you can see the after-tax cash flow is around $900 million when you use a $2,900 gold price. Yeah. But I think most important, when you look at Archimedes, if you see that 5,100 elevation, we have permits through we can mine at will above 5,100. Main reason for that elevation is that's the same elevation as the open pit that you can see in the upper left. So we're in it says the final permitting stage here, but that's actually complete as of October of 2025. For the lower level, as I mentioned, we're going to be drilling the upper Archimedes this year and then continuing that campaign into Q1 and Q2 of 2026 for the lower Archimedes. So what that drilling will consist of is detailing out what's called the Ruby Deeps, understanding the technical work that needs to be done on the metallurgy. And the metallurgy is well understood because this mine operated before, but just confirming that it's consistent and what sort of blending strategy we will need to do for the autoclave. And then move this forward into a feasibility study once this drilling is complete, which we should have in Q1 of 2027. And that depends on how successful we are and when we finish the drilling for the lower Archimedes. If we're extremely successful, we may continue that campaign for a little longer. But as you can see here, the grades are excellent. Again, at Ruby Hill, the Mineral Point open pit is a very large, low grade, similar grades as some of the other big mines in Nevada, but around 0.5 gram a ton, 3.4 million ounces of measured and indicated, and another 100 million ounces of silver. For the inferred, it's a little bit lower grade. However, there's quite a bit of upside for us to be drilling. We'll be evaluating drilling that sometime in the future, but even just with that, on the PEA alone is 17 years. We expect, or we hope to be able to take this mine life well beyond 20 years as we put together the next drilling campaign and the technical work. Even with the resources as they are, the PEA shows approximately all-in sustaining cost of $1,400 per ounce. And as you can see, this is significant after-tax cash flow at $2,900 gold and $3,200, and we say spot gold and silver, but in fact, that's quite conservative compared to what we see in the gold price today in October of 2025, and then has an after-tax cash flow of $3.6 billion. So on the technical side, what that consists of is it's a large oxide gold-silver deposit. It has the potential to become one of the largest open-pit truck and shovel operations. We're working on baseline studies to prepare for permitting as well as trade-off studies for the engineering optimization. We have completed some of the geotechnical drilling. We are working on a hydrogeological model, and we've done some of the structural rock mechanics work so we can understand the pit wall stability. Because the Archimedes open pit actually had some challenges, so we can learn from that, and then we're drilling further to be able to optimize the pit wall angles for the Mineral Point pit. The permitting approvals, it says here expecting late 2029, but internally we are evaluating ways that we can accelerate that process. So this is a large-scale open pit mine, very good leach kinetics. So the recoveries are in the high 70s from the work that we've done to date. Secondly, this is, again, this is most of these deposits, if not all of them, are epithermal into a sediment host. This is similar. So it's very consistent mineralization across a large massive dolomite structure. Virtually no economics or no organics in the dolomite. And so that makes for a very consistent mine plan, and it's not dissimilar to some of the other very large open pits that exist in Nevada. So now over to Cove. This is arguably the best ore body of the underground deposits that we have. So this is approximately 8 grams per ton. These numbers that you see here are based on the PEA. We have completed the drilling. We are going to be putting together a reserves estimate at the end of Q1 of 2026. And we don't anticipate any significant changes for the M, I, and I into the reserves, and we're working on that now. The PEA outlined approximately 100,000 ounces per year operating at over 8 years with an all-in sustaining cost of approximately $1,300 per ounce. So again, if you take a look at the gold price and $2,900, that's a significant after-tax cash flow of $790 million. And if you were to take a look at the current gold price and input those numbers, it would be significantly higher, of course. We do anticipate to have numbers similar to this or better with our reserves estimate that we put as part of the feasibility study by Q1 of 2026. So just on the technical side, the key focus for Cove, it's been drilled. The metallurgy is straightforward. These are relatively flat-lying. Again, very well understood marker horizons geologically. It's also epithermal into a sediment host. It did operate in the past on the open pit that you can see on the right side of that image. Most of the deposit of the high grade is the Helen and the Gap zones, but there is some upside potential at the bottom of the open pit. And the key technical focus and permitting focus is the dewatering of the Cove pit, which is nearly full with water, and managing that process as we go forward, and then expected to take approximately 3 years to get that permitting and initiate the dewatering. So phase 1 is the key concept for phase 1 of our production plan is to operate the Lone Tree autoclave and have the feed coming initially from Archimedes and Granite Creek underground, and in time the Cove underground. The current toll milling agreement to third parties, we only receive approximately 55 to 60% of the gold value. When we have the Lone Tree operating, it will be then approximately 92, and so the difference in the margins is significant, and that justifies the development of the Lone Tree autoclave, which is an approximately 2-year process. Right at this moment, the level 3 or class 3 engineering feasibility study is complete by Hatch Engineering. We will be issuing those results this quarter in Q4 of 2025, and we have actually initiated early works already with some of the very initial stages of planning, getting the basic engineering team from Hatch working on some of those updated permits, some of the engineering, power studies, some of the water and the tailings that is virtually complete, just some of the finer details, and as well some of the long lead procurement. So that's all in progress. And what this primarily consists of is replacing and updating the existing plant that operated from the early 1990s through to 2006, with the key difference being filtered tails instead of conventional slurry tails. The rest is really just replacement with the oxygen plant. Now the environmental regulations require a mercury abatement system, which is straightforward. And we do need to replace some of the water treatment plant, some of the thickener, and the refurbishment of the autoclave itself. And as you can see there, the costs are pretty consistent across the board, with the overall general plant, the autoclave, and the tailings being approximately 3/4 of the cost, and then some of the other finer details are less. So what is key about this capital project is this is a low amount of construction hours. It's in the range of direct construction hours around 600,000. Most mines, when you build them, are into the millions, 3, 4, 5 million and beyond. There's minimal long lead equipment. It's really just steel replacement, some instrumentation. There's not a lot of long lead equipment needed, and that in fact is being ordered now. We have strong local contractors in northern Nevada that know how to do this, that we can have a competitive bidding process to be able to achieve this. We don't need a camp. All the infrastructure is in place. This project is right beside the I-80. We have the towns of Winnemucca, we have Battle Mountain, Elko, and we can choose which contractors can put this together, who have skills to be able to do this. And we have a dedicated owners team which is in place already, and we're working on the whole contractor management strategy now ahead of time. So this is not a high-risk capital project as you would have building other mines elsewhere into the world. And in addition, we have a very strong set of management. We have a very strong management team in Reno in working with, we have Tim George, Todd Esplin, as you can see there, Tyler Hill, Mark Miller, Curtis Turner. All these people have worked for the large companies in Nevada. They have contacts and connections. They understand the area. They're local. And I would estimate 100 to 150 years of experience between all of these people in Nevada. And they're the execution team to actually put this all together. So I hope I've provided you with the impression that this represents an exciting opportunity to invest in a first-tier mining-friendly jurisdiction, an excellent resource base, with a short-range, low-risk plan to be able to produce 600,000 ounces, with a team that has built from a small producer in Africa through to a mid-tier that has done this before, with an achievable execution plan. So we're all very excited, and I hope you will be too.